We are diving straight into the action with ARM Holdings reporting record quarterly and annual results, driven by massive cloud AI demand and the launch of its first in-house AGI CPU. ARM secured over $2 billion in demand for its new data center chip, instantly positioning itself as a major new revenue source. And we're looking at how this massive infrastructure push is reshaping the entire semiconductor landscape.
Never get caught with a dead phone again. This INIU portable charger is compact, travel-friendly, and gives you fast 45-watt charging with a built-in USB-C cable, so there's no need to carry extra cords. With 10,000 mAh power, it's perfect for busy days, trips, emergencies, or anytime your battery drops too low. Grab yours on Amazon through the link in the comments before your phone hits 1%.
Next up, we examine the major shift in the market reaction following ARM's earnings report. After the initial surge, ARM stock experienced a sharp reversal, wiping out a significant portion of its after-hours gains, all because CEO Rene Haas revealed a critical supply constraint, stating the company could only secure supply for half of the massive demand for its new AGI CPU. This is a crucial moment for understanding the transition from licensing to a capital-intensive chip business. We also have major moves happening in the advisory world. Professional services company S&W has launched a brand new economic advisory practice, appointing Shelley Horn and Jonathan Gillam to lead the team, focusing on providing independent expert services to government departments and major corporations dealing with complex policy and regulatory challenges. And finally, we hear directly from ARM's CEO Rene Haas, who is confidently stating that the AI data center demand is absolutely going to continue, signaling an optimistic outlook despite the supply hurdles. Don't miss the full breakdown of how these supply constraints and booming demand are setting the stage for the future of AI infrastructure. Stay tuned for more breaking news. ARM Holdings has reported record quarterly and annual results, significantly driven by surging demand in cloud AI and the successful launch of its in-house AGI CPU. The company has secured over $2 billion in demand for its new data center chip, establishing a crucial new revenue stream. Management anticipates substantial sales growth, though they are cautioning investors about ongoing weakness in the smartphone market and emerging supply constraints. This shift positions ARM squarely in the center of the AI infrastructure conversation. The stock has demonstrated robust momentum, rising 17.7% over the past week, 59.5% over the last month, and 106.8% year-to-date, reflecting market enthusiasm for ARM's pivot toward data center compute. The combination of the new AGI CPU and growing cloud AI royalties signals a business increasingly dependent on data center budgets. Key areas for investors to monitor include how ARM manages reported supply constraints and converts the over $2 billion in chip demand into tangible revenue. While the smartphone sector faces headwinds, the company's success in balancing this softness with its new AI-driven streams will define its future trajectory. Valuation metrics are also under scrutiny, with a P/E ratio of 314.6 compared to the semiconductor industry average of 53.7, making future AI chip orders and revenue realization critical tracking points. Investors are advised to monitor capacity and end market softness closely. The stock currently trades significantly above analyst price targets, with shares trading 221% above estimated fair value, underscoring the market's current high expectations for ARM's AI infrastructure narrative. Professional services firm S&W has launched a new economic advisory unit, integrating it with its existing consulting, forensics, and restructuring practices. To spearhead this new practice, S&W has appointed Shelley Horn and Jonathan Gillam as partners. This dedicated unit will focus on delivering economic advice and independent expert services. The economic advisory practice is designed to support government departments, economic regulators, corporations, and their legal advisors by tackling complex policy design, regulatory questions, competition issues, and disputes. Shelley Horn brings over 2 decades of experience in competition, regulation, public policy, and litigation support, having served as both an advisor and an independent expert in court proceedings. She previously led an economics practice at a large professional services firm. Jonathan Gillam's expertise lies in macroeconomic modeling and applied economic analysis, including policy assessment, market impact evaluation, and dispute resolution. His career includes roles in the UK civil service, including at HM Treasury, where he focused on economic forecasts and tax policy, and as chief economist at PricewaterhouseCoopers. S&W Advisory head John Rugman hailed the launch as a significant milestone, emphasizing that the appointments underscore the firm's commitment to building a market-leading advisory business. Rugman stated that embedding economics within their broader offering positions S&W uniquely to assist clients with their most complex regulatory, contentious, and strategic challenges. Further strengthening its capabilities, S&W also appointed Pavan Singh as a partner in its London office last month to enhance its valuations and modeling capacity. ARM Holdings experienced a significant reversal in its stock performance following a strong earnings report, as market sentiment shifted from optimism about demand to concern over supply constraints. The company reported a better-than-expected fiscal fourth quarter, with revenue reaching a record $1.5 billion, marking a 20% year-over-year increase, and adjusted earnings per share of 60 cents, surpassing the 58 cents forecast. Furthermore, customer demand for the new ARM AGI CPU was reported to exceed $2 billion across fiscal 2027 and 2028. Initially, the stock surged approximately 13% in after-hours trading on Wednesday. However, this rally quickly reversed after CEO René Haas disclosed that the company has only secured supply for about $1 billion of the projected demand for the new chip, indicating a significant capacity shortfall for the remaining demand. Consequently, the stock dropped, settling at $222.12, down 6.4% from its regular session high of $237.30. This market reaction highlights the heightened scrutiny placed on high-flying chip stocks. ARM's shares are trading at approximately 100 times forward earnings, reflecting extremely elevated expectations for flawless execution and uninterrupted AI demand. Analysts noted that while the results were solid, they were insufficient to satisfy investors already pricing in perfect execution. The key takeaway for the market was the distinction between strong demand and the ability to deliver it. As ARM transitions from a licensing model to a more capital-intensive chip business, investors are highly sensitive to any indication of bottlenecks that could slow production ramp-up. This dynamic suggests that even strong earnings can be negated if the forward guidance signals potential delivery friction. ARM CEO René has expressed strong confidence regarding the continued demand for AI data centers. This statement was reported by CNBC, highlighting a positive outlook for the sector. The news underscores the robust and ongoing market appetite for infrastructure supporting artificial intelligence advancements. While the provided content is brief, the sentiment conveyed by the CEO suggests sustained growth and significant investment in data center capacity to meet escalating AI needs.